Welcome back to my home buyer series. I'm Jason Hubbard with Loyalty Home Group. Today we're going to talk about navigating home buying costs and understanding closing costs and fees. Remember to hit the like button, subscribe, and ring that bell if you haven't already. This way you can see new videos when they come out. Buying a home is a significant financial endeavor, and it's important to be aware of the various costs associated with the process. Beyond the purchase price, you'll encounter closing costs, taxes, insurance, and other fees that can impact your budget. In this video, we'll break down the different costs you can expect when buying a home and provide some clarity on them so you won't be surprised when the time to close comes. First, of course, we're going to talk about the purchase price. The purchase price is the amount you agree to pay for the property. It's the starting point for your home ownership journey and the most substantial portion of your expenses. The next one that you need to be ready for is the down payment. The down payment is a percentage of the purchase price that you pay up front. It typically ranges anywhere from 3% to 20% of the purchase price, but it all depends on the mortgage loan type you have and what the lender's requirements are. For instance, if you're doing a VA loan or a USDA loan, then that down payment could be as low as 0. Then there's mortgage loan fees. When obtaining a mortgage, you'll encounter various fees from the lender, including the origination fee. This covers the lender's administrative costs for processing the loan. The appraisal fee. This covers the cost to get your home appraised to make sure the home is worth at least what the loan amount is. The credit report fee. Lenders check your credit history and this may incur a fee. Underwriting fee. Lenders charge this fee to assess your credit worthiness and determine loan eligibility. And then there's closing costs. Closing costs are expenses associated with finalizing the sale. They typically can range anywhere from 1% to 8% of the purchase price, but that's mainly because the big portion of it could include agent fees. These fees can range anywhere up to 6%, but typically in our market, they've been paid by the seller, but they can nowadays be split between the seller and buyer. This just depends on what it says in the listing for the property that you're buying. There's title insurance. This protects against potential disputes over property ownership. Escrow fees, which covers the cost of maintaining the escrow account for property taxes and insurance. You have recording fees, which are the fees to record the property's transfer of ownership with the local authorities. You have transfer taxes, and this is for taxes imposed by your state or local governments when transferring the property. You have homeowners insurance. This is to protect against property damage and liability claims. You have property taxes levied by local governments based on the property's value. You have the home inspection and the pest inspection fees. These are costs for the inspections that are done. Usually up in front, you pay for those. You have the survey fee, and now this isn't going to apply to every deal, but if your home needs a survey, there could be a fee for that as well. Then you have courier and express fees. These are charges to have documents delivered. Now, keep in mind, not all of these fees will apply to every single deal. I just wanted to put them out there so you are aware of them. Next, we have prepaid expenses. Prepaid expenses are costs that you pay in advance, typically at the closing, and they include property taxes. Funds are placed in escrow for future tax payments. Homeowners insurance, a portion of your annual premium is collected up front. Mortgage interest for the partial month between the closing and the first mortgage payment. And then next we have private mortgage insurance. If your down payment is less than 20% of your purchase price, you may need to pay PMI, which protects the lender in case of default on the loan. PMI costs vary based on the loan and the down payment amount. Next, we'll talk about homeowners association fees. If you purchase a property in a community with a homeowners association, you'll be responsible for monthly, quarterly, or annual fees covering maintenance, amenities, and other community expenses. Then you can't forget about moving expenses. Don't forget to budget for the costs associated with moving, such as hiring a mover, renting a truck, and packing supplies. To recap, buying a home involves various costs beyond the purchase price. Understanding these expenses, including the down payment, mortgage loan fees, closing costs, prepaid expenses, PMI, HOA fees, and moving expenses, is crucial for budgeting effectively and ensuring a smooth transition into homeownership. Working closely with your real estate agent and your mortgage lender can help you anticipate and plan for these costs, making your home buyer experience more manageable and financially secure. Again, this is Jason Hubbard with Loyalty Home Group. Thank you so much for joining me today. I look forward to seeing you on my next video.